Hi, welcome to Gulshan S-World Difference between intraday trading and long-term trading. Preface: trading in the fiscal requests can be astronomically classified into different strategies, grounded on the time horizon and objects of the dealer. Two of the most common approaches are intraday trading and long-term trading. Understanding the crucial differences between these strategies is pivotal for opting the bone that aligns with an existence threat, forbearance, investment pretensions, and life. 1. Description: Intraday trading. Intraday trading, also known as day trading, involves buying and dealing fiscal instruments within the same trading day. Positions are squared off before the request closes, and no trades are carried overnight. Long-term trading. Long-term trading involves holding fiscal instruments for an extended period, generally months or times, with the anticipation of significant price appreciation or tip income over time. It's complete by Gulshan. Any Dubaitis PLS comment. 2. Time horizon. Intraday. Trading veritably short-term, generally a many twinkles to several hours. Long-term trading. Long-term, ranging from months to several times or indeed decades. It's complete by Gulshan. Any Dubaitis plus comment. It's complete by Gulshan. Any Dubaitis plus comment. 3. Objects. Intraday trading subsidize on short-term price oscillations. Generate quick gains from diurnal request volatility. Long-term trading figure wealth over time by serving from request growth and compounding. Focus on the beginning value and fundamentals of investments. It's complete by Gulshan. Any Dubaitis plus comment. 4. Threat and price. Intraday trading. High threat due to request volatility and influence operation. Implicit for high prices within a single day, but comes with significant losses if trades go wrong. Long-term trading. Lower threat as it avoids short-term request noise and volatility. Prices are generally gradational but can be substantial due to compounding and request growth. It's complete by Gulshan. Any Dubaitis plus comment. 5. Chops and analysis needed. Intraday trading requires specialized analysis chops, including the capability to read maps, use pointers, and identify patterns. High focus on request trends, liquidity, and timing. Long-term trading requires abecedarian analysis chops to estimate the fiscal health, competitive position, and unborn prospects of companies or means. Tolerance and a long-term vision are essential. It's complete by Gulshan. Any Dubaitis plus comment. 6. Capital and costs. Intraday trading generally requires lower original capital as dealers calculate on influence. Advanced sale costs due to frequent buying and selling. Long-term trading may bear advanced original capital to make a diversified portfolio. Lower sale costs since trades are occasional. It's complete by Gulshan. Any Dubaitis plus comment.